The ability of the West to, silly as it may seem, suppress the price of silver nakedly, if that's a word, or the naked suppression, is very dangerous. And it's crazy. With gold at 33.80, the 200-year average, roughly of even 45 to 1, would put silver conservatively at $75 an ounce. And that would just be the average price of literally last 150, 200 years. It's coming out of the ground at 6 to 1, which would put it at near $400 an ounce. So I'm not saying we're going to be there tomorrow. But what I am saying is, from an asymmetrical standpoint, not only have all of us realized what a value silver is, no matter how difficult it is to hang on to that conviction in the light of counterintuitive market behavior, it appears to me that the most sophisticated and well-informed traders in the world are now on to that.
Recent indicators reveal a profound shift underway in the global silver market, driven by substantial institutional and sovereign buying rather than mere retail speculation. Andy Schectman, president of Miles Franklin Precious Metals, points to an unprecedented rise in physical silver deliveries on the COMEX, a market historically focused on paper contracts. These record-breaking delivery numbers reflect a strong preference among market participants for physical metal over cash settlement. At the same time, silver prices on the Shanghai exchange have surged beyond $36 per ounce, significantly outpacing those in the West. This widening price gap signals that genuine price discovery is increasingly centered in the East, where physical demand and supply dynamics dominate. Schectman highlights China's central role in this changing landscape. According to multiple industry sources, including trader Eric Young, China is aggressively sourcing refined and unrefined silver from global markets, often through off-market transactions that escape traditional tracking systems. The country's state banks have reportedly opened the floodgates for silver imports, expanding quotas and absorbing everything from Doré bars to silver concentrate. Goldman Sachs recently revealed that China's unofficial gold purchases in March and April significantly exceeded reported totals, and analysts believe silver is following a similar pattern. Far from being a short-term arbitrage move, this accumulation reflects long-term strategic positioning, one that aligns with China's broader efforts to reduce dependence on the US dollar and assert greater control over critical resources. Many analysts believe that silver is nearing a critical breakout moment, driven by a confluence of technical strength, collapsing inventories, and persistent demand from sovereigns. Schectman points to a 15-year base formation that now underpins silver's price structure, suggesting that a sustained move above $35 could trigger a powerful upside revaluation. With visible inventories in sharp decline and COMEX delivery requests continuing to climb, the market appears to be tightening at a time when retail investors remain largely on the sidelines. While years of suppression and manipulation have created fatigue among Western participants, institutional and sovereign players are taking center stage. If current trends persist, silver may soon emerge not only as a monetary hedge, but also as a globally revalued asset, one that plays a pivotal role in the evolving financial landscape. Now, we present the clips from Andy's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver is one of these deals where you can see that the chess pieces are put on the board. And when we talk about a cup and handle formation, it mimics gold's cup and handle formation almost perfectly, with the exception of gold has broken through the base or the top of the cup and has gone up to the handle. And what we see with silver, it's right at the base, right at the tip of the cup, ready to break through. If it gets through 35, in essence, it's broken through to the handle part. And this is a long 14, 15, 16-year base building. That makes the move that much, potentially that much stronger. You can feel it. And the ability of the West to, silly as it may seem, suppress the price of silver nakedly, if that's a word, or the naked suppression, is very dangerous right now when we see these deliveries and the amount of standing delivery requests, not just on COMEX, but we're seeing it the same way on the Shanghai exchange. We're seeing it on the London Metals Exchange. When we see stuff come off Shanghai, It's that they're promoting and prompting their citizens through state-sponsored gold and silver acquisition programs to accumulate metal. In fact, just as a side note, we just saw that China has lifted quotas and increased them for the banks. The banks who are traditionally the ones importing the metal into the country, they've now increased those quotas, and we're seeing large amounts of importing coming into China. I think I have the amount. Let me just see if I do. I may or I may not. I read it the other day. I thought I jotted it down. I may not have. But huge amounts of gold and silver delivered into China. Here we go. Well, for gold, they bought 30 tons of gold in March, five times more than they officially reported, according to Goldman Sachs. This follows the purchase of 50 tons of gold in February, 10 times more than they reported, according to Goldman Sachs, and 127.5 tons in April. Well, we know that they're importing gold. The rumor is, according to Eric Young, King Kong on X, that they're buying up every ounce of silver that's not nailed down. And that's one of the reasons they're going to lengths to buy Doré and concentrate, which disintermediates the market, which makes it impossible for us to say just how much silver they're really buying. But ask yourself, if a $33, $34 price was real in terms of its value, why would they be going to such great lengths? Eric says they're buying up everything they can, playing the long game. Hold tight, all you silver stackers. We will have our day, is more or less what Eric is saying. And I agree with that. So silver is finally starting, I think, to get noticed, and even noticed by the central banks and the big traders, it appears. So, we've been waiting a long time for it, whether it be the technical formation, the amount of deliveries, or the central bank purchasing. All three things are at the highest level, point to silver finally starting perhaps to get that big push above 35 into the 40s. And from there, it's really, there's very little of any resistance above that, potentially off to the races. And it's crazy with gold at 33.80. The 200-year average, roughly of even 45 to 1, would put silver conservatively at $75 an ounce. And that would just be the average price of literally last 150, 200 years. It's coming out of the ground at 6 to 1, which would put it at near $400 an ounce. So I'm not saying we're going to be there tomorrow. But what I am saying is, from an asymmetrical standpoint, not only have all of us realized what a value silver is, no matter how difficult it is to hang on to that conviction, in the light of counterintuitive market behavior, it appears to me that the most sophisticated and well-informed traders in the world are now onto that same thread. And so I would expect, based upon the positioning, the deliveries, the right now, the 36.36 closing price yesterday in Shanghai, the arbitrage, everything is pointing towards an escalating silver price into the fall. We already know how the world feels about accumulating gold in this environment. I think silver is not too far behind it. And that's the pattern it's followed for all of time. There's a 90% correlation in their movement, but not always with perfect symmetry. And to Rick's point, silver goes first, silver catches on. And it appears that we're right at that level, right at the time when a lot of the retail investors have kind of lost faith in silver. And I understand that. And quite frankly, that's a compliment, if you will, to the manipulators who have done a very good job, not only through volatility, but through counterintuitive price action. And by holding it down in the face of gold, accentuating, there's been a lot of people who are just exasperated with silver. And that is another contrarian indicator. When they've held for this long, they see things brewing and growing and accentuating, and just through exasperation and just being exhausted by trying to stay positive and focused, they give up. So yeah, I honestly am quite bullish on silver, maybe more so than I've been in a while, just looking at what's hiding very, very near the surface, but yet just a little bit under the surface, so it's not getting much in the way of attention.
China is deliberately pursuing a long-term strategy in the silver market, aiming to accumulate significant physical holdings that extend well beyond industrial needs. Andy Schectman explains that the country's extensive purchases of Doré bars and silver concentrates serve to mask a larger strategic goal. This accumulation supports China's future reliance on silver for advanced electronics, batteries, military technology, and monetary purposes. While a return to a formal gold-silver monetary system is unlikely, silver's close historical correlation to gold as a store of value remains highly relevant. China's approach reflects a sophisticated understanding of silver's essential role in both economic and geopolitical arenas, positioning itself to secure critical resources amid a shifting global financial order. At the same time, activity among institutional and sovereign investors in the silver market is increasing, with hedge funds and other large players becoming more actively involved. Schectman points to rising physical silver deliveries on the COMEX as a clear sign that ownership of actual metal is taking precedence over speculative paper trading. The market's response near key technical levels, such as the 200-day moving average, shows strong buying interest, reinforcing an optimistic outlook for prices. Furthermore, gold is increasingly perceived not only as an investment, but as a vital asset whose physical accessibility is crucial, a trend that silver is expected to follow closely. This growing recognition of silver's strategic importance has even caught the attention of policymakers within the United States, signaling a rare alignment of market dynamics and government awareness.
Well, it closed. I haven't seen today's number, but it closed yesterday, June 3rd at 36.36, up $2.70 or 2.75%, rather. I'm sorry. And so, yes, this is what they do to entice the sophisticated, traders who have the ability to buy in the West and deliver in China. It will never come back. But if you're dealing in 5,000 lot increments and you're dealing in 100,000 ounces or a couple 100,000 ounces, if you're making $2-3 an ounce premium, that's a good trade. Well, it's great for your short-term trade, but in essence, you're selling out the future of the country. And that's kind of what Eric's point was, is that the Chinese understand this game. They're playing the slow, long game and have been delivering. And that's why they're buying up all the Doré and the concentrate, because it masks their real endeavor, their real aspiration. And his feeling is that, and this guy lives in Hong Kong, he's spot on. And he says, look, they're playing the long game to secure enough silver, which is strategic in nature, in my mind, not industrial, as we're led to believe. They're securing the future in what is really highly dependent on silver in electronics, in batteries, in military, in so many, not to mention monetary. Now, I don't know that we'll ever go back to a bimetallic system where gold and silver back the monetary system. But I do think that the realization that silver is very important, that it tracks gold regardless of its monetary status, and has since the beginning of time, those things are still in place today. So it's just beginning to be, I think, realized as something very, very important. One of the things that we've seen with gold and silver going higher is that the non-commercial interests, that would be the hedge funds in particular, have really not participated too much. And it just seems as though, looking at their participation, that it's starting to move up. So you have the central banks that have been buying, and then the non-commercial players that really haven't been too deep into gold and silver. That looks to be changing on COMEX as well. Everything is pointing towards an accentuated price into the fall. So I would say that, yesterday's move was spectacular, and we'll see if it has the follow through to continue going. It was pretty much flat today, but it's holding. And one of the things that I've noticed with gold, and we'll see how it plays out with silver, is that anytime it gets near the 200-day moving average, there is a slew of buyers who come in and support it. When you look at gold from the context of the way that I used to view it, then again, if 3,500 was the benchmark that we finally touched and then it got slammed, it would be slammed and wouldn't come back for the next decade. It would just literally be obliterated. We'd be at 2,500 an ounce right now. If, as Rick says, past was prologue. Well, I think what we see right now is this divergence in the relationship between gold and other asset classes. Gold is taking on a life of its own, and silver will follow it. I think gold is being realized as being something where access to it is far more important than the yield that we receive on it. And that access, to me, is something that much of the world is saying, we don't need this to pay a yield. Getting possession of it in our hands when, we're not aligned really with the West's initiative is probably more important than not. That's why we're seeing so much of the world accumulate this stuff. But it seems to me someone within the Trump administration, or some people within the Trump administration have alerted President Trump to this fact. And you can see by what's happening on COMEX and the deliveries, just how relevant people in this country, for the first time that I can remember, are viewing gold and silver. And so that's also a very bullish sign for what's coming next.
Recent market dynamics indicate a robust and sustained increase in silver prices, driven by a convergence of strategic accumulation and tightening physical supply. Unlike the past cycles largely driven by speculative trading, this new phase is characterized by institutional and sovereign entities actively securing physical silver, underscoring its growing importance beyond traditional industrial uses. Silver's unique role in advanced technologies, such as electronics, batteries, and military applications, combined with its monetary significance, is elevating its demand in a manner that transcends mere market speculation. At the same time, shrinking visible inventories and rising physical deliveries reflect a tightening supply chain, signaling that available silver for immediate purchase is becoming increasingly scarce. This scarcity is further intensified by covert accumulation strategies in key global markets, particularly in Asia, where large-scale off-market purchases are quietly depleting global stockpiles. This shift in supply and demand dynamics is setting the stage for a marked price appreciation as market participants recalibrate their expectations and position themselves for a new reality where silver commands a premium reflective of its strategic value. That's it for today. Share your thoughts on Andy's prediction of gold and silver price suppression in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.